Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be having a look at the American indices. We're going to be looking at our proxy for the S&P 500, which is the SPY ETF, and then we're going to have a look at the Nasdaq as well. Now I'm going to keep this short and sweet as my voice is struggling a little bit as I had my first live stream back yesterday and I'm a little out of practice, so without further ado, let's get underway. We're going to start here on the SPY, and like I said, I'm going to keep this nice and brief. We have a series of counts. My primary is still bullish. We have an alternate which has been the same for quite a long time now. We have an alternate, both of which of these are bearish, which is a little dodgy. Now I spoke about these in the live stream yesterday briefly, so I just figured I'd update the rest of you guys here on YouTube. So first count, primary count, is that we topped in a primary 1 and we've had this extremely short primary 2. Now the only caveat, and this is as I expressed yesterday, is the depth of it. I find it disturbingly small. You know, wave 2 pullbacks during this bull market have been very short though, so I'm still kind of happy with this, to be honest. It's a single WXY. This is the count we've had for quite a while now here on the indices, and for the meantime we appear to be bullish coming out of it. Now I've got this as a 1-2-1-2 nesting structure here at minute and minuet degree. We have an invalidation point down here at 410.65. If we come down through this, it's less likely to be, well, it's not this scenario at all, I should say, then this bullish count is invalidated. What I would say is, depending on the depth of this subwave correction, we're not back at the 61.8 yet, the golden zone. Now we may have done enough to turn this around and be on our way back up now. Okay, in which case we've gone 1-2, 1-2, and we're into the minuet 3. If we do come deeper, then once we break the golden ratio, if we break the golden ratio, we have to downgrade the probability of this. It doesn't mean downgrade it from the primary. Whether or not the alternate is more likely will be up for debate at that point. However, if we go through the golden zone, as a rule, it's a sign of weakness. So we'll keep our eyes open. So the further deeper this correction gets, the less likely this is correct. Now, let's just put in one extra level here, which is the beginning of this subwave. Now, any bullish scenario off of the low is invalidated at 410.65, but really, we can write this out. This idea is written off here at 415.12. That should be, because that's where wave 2 can't come back beyond where the wave 1 began, right? So, okay, so that is essentially the primary count. We've done a zigzag here into a W, and then I've got this as a WXY with a zigzag in here into the W. So this is minuet degree into, this should be minor degree, into intermediate X, A, B, C, 5 clear waves down here in the C, into the Y to get our primary 2, double zigzag. Okay, right, now that's the primary. So now let's have a look at the alternate. Bearish alternate, and we would just take the 2, move it over here. Now this is an idea excuse my voice, first discussed several weeks ago, which is the idea that this is a single move down, a double zigzag, and we've got a connecting X wave here in 3 waves A, B, C, 5 waves in the C here, and now we're going to get another zigzag lower. I do have another alternate we'll look at, and I'm undecided to which one I prefer, but I think from a conventional sense of things just looking better, I'd go with this one. And this is just going to result in another zigzag lower. Okay, so that 415 level there, let's just put that in the primary. Sorry, I should have gone into the, excuse me, I should have gone into the bullish primary folder. There we go. So what we're looking for here is 5, 3, 5 again. Now what's the merit of this count? The single greatest merit of this count as our alternate is that it just takes the 2 lower and gives us a more believable primary 2 correction. Okay, because that's my only concern, is the shallowness of this 2. But for the meantime, because I can't get this to be a single clean zigzag. Alright, so I do have an alternate in the Nasdaq, which makes this a prettier X-way. So what I'm just going to do is I'm going to switch that off, and I'm just going to introduce a different idea here. So what if we still had an ABC to here? Okay, rather than saying that this was our ABC, right? Because we have problems picking out 5 ways regardless, don't we? So what we can say is that this was W. Okay, this whole structure is X, and then we'll get a Y. Now, I know you're like, well, what was the point of that? It's basically the same. Yeah, it is basically. It's just an alternate way of looking at it, but we've got a flat pattern in here. Okay, now, how you get your 5 waves in the C, I guess you'd have to do something a little dodgy looking like this, but I guess it's an option. You know, I don't think we necessarily need to lean into it though, but I think the explanation I have in the Nasdaq fits this. It doesn't really fit the SPY, but I'm bringing the 2 accounts into alignment. So let's just switch that off for a minute. There's your alternate. WXY X W and then ABC, hopefully. Now I know some people won't like that because I've got a double zigzag where a zigzag should be. That's the main reason why I just did that. ABC zigzag, ABC flat for an X, ABC Y zigzag. Okay, so take your pick. Now the dodgy idea, and I think it is very dodgy, I spoke about this yesterday as well, is the idea that we've had a diagonal ABC1, ABC2, ABC2, ABC3, ABC4, ABC5. I don't like this because we had a double truncation down here. We had a C truncation of an ABC, and we had a 5th truncation of the 3. So it's just really dodgy. But diagonal A, zigzag in the B, and now 5 waves down in the C. So that's our alternate, I guess you could say. So that's it, guys, for the SPY. To sum up, that's my primary that we've already finished in a double zigzag, and we've gone 1 2 1 2. Come back much further than the 61.8, start to lose confidence in this, invalidates at 415 spot 1 2. If that happens, then we can switch to either this alternate, double combination WXY going lower, or we can look into either of the other 2. So single zigzag, flat zigzag, or the diagonal, which I think is a little, I'm not a fan of. Not here on the SPY anyway. And that's it. So for the meantime, I'm still bullish. If we start the breakdown below 61.8% and get much deeper, I'm going to start to lose confidence in this, but it is still my primary count, and I will stick with it until I lose my confidence in it. We could rocket out of here today, couldn't we? So you just don't know. That's the SPY. Let's have a look at the Nasdaq here before we come back and have a look at some basic technical analysis, see how things look from a structural perspective. So Nasdaq I've now brought into line with the SPY. The only difference is we had this truncated 5th wave up here, a mild truncation, and just going shy of, it was really just a wick we went shy of here, but it's still a truncation because the body of the candle and the 3 did finish slightly higher than the 5. So a bit of weakness here at the top with the Nasdaq. Bullish idea is the same. ABCW, X, ABCY. Right, and we've gone 1 2. Now I haven't needed to go 1 2 1 2 here with the Nasdaq because I've been able to get 5 waves off of the low as we made a lower low. Now this has already come a little deeper. Okay, so let's just run it up. We're at the golden ratio and we reversed, but we had a pretty bearish day yesterday while I was on the live stream. It could be another 1-2 of a smaller degree, right, before we go higher. Finding support at the golden ratio is always a positive until it breaks. So we'll see what happens today. But like I said, if that 61.8 breaks down, I'm going to start to become a little bit more skeptical about this idea of it being a 1-2. But if we come out flying out of here today, I'm going to become more confident than it was. Putting it simply. So this is still the primary for the moment, so the 2 would be over here. Okay. Alternately, let's just put that into the bullish primary. Alternately is a WXY. Now here, the single zigzag ABC into the flat fits better because we know we can get 5 waves in here, right? Because of the primary bullish count. So we can go 3, 3, 5 for an expanded flat. The C finishes beyond and the B expands as well. So this is just, you know, C expands beyond the A, the B expands beyond where the A began. So we get an expanded flat in an X. We get a single zigzag in here instead of a W, instead of a WXY, instead of a double zigzag. So it goes zigzag, flat, zigzag, ABC for a WXY. Okay, for 2 zigzags. This has this definitely has a better look than it does on the SPY. Okay, so this would be my first alternate double zigzag lower with an expanded flat in between. But it's still my alternate. Like I said, no reason to lose confidence in that bullish count until it breaks down further. Now, we've also got the diag option over here. Now, what I find, once again, okay, so at least this time we don't get a truncation. We get 1, 2, 3, 4, 5 contracting, falling wedge, a contracting, leading diagonal. Now, I'm not calling it a leading diagonal because of the obsession with having to get 5 waves into the emotive structures of it. I don't necessarily believe that has to be the case at all. It's 3, 3, 3, 3, 3, 3 all the way. But it's 1, 2, 3, 4, 5. It's a leading diagonal because it's in an A or a 1. And in this case, it's in an A. The 5th wave does not truncate before the 3rd, so that's positive. And the C does not truncate before the A, like in the SPY. So this is a far more legitimate diag coming down here into an A. However, I've counted this as 5. You see the problem? There's no clear zigzag in here. So if we turned around and we're now going lower, you'd expect this connecting B wave to be a zigzag, right? And it's not. Or not clearly. So you could argue that any bounce that perceives to be bullish could actually be another motive wave up of a C of a B before coming down. So great. So even if it's bullish, it could be this thing. Right? If it is, however, it will not make a new high. It will stop before a high and it will come down and break down here. Now, if the B was here, then getting this into a zigzag is very difficult. So I would favour our first alternate instead over this one. But at least the diagonal here in the Nasdaq looks better. Okay, so let's just do a quick summing up again, and we'll put that little polygon line in that diagonal folder. Excuse me. Primary count, we're done. Single double zigzag, ABC, single double zigzag, you know what I mean, ABC, W, X, ABC, Y. 1, 2 out of here, holding at the golden zone, will rally higher from here. Still going to remain my primary. If the golden zone breaks and we start to come down through these levels, I'm going to lose confidence that this is correct, and it gets written off completely at 13. Actually, let's get this. It is precise. 13018 spot 87. Go through that. This is incorrect. In that circumstance, first alternate I would go for would be zigzag W, expanding flat X, and another zigzag lower in a Y. And then we get a nice conventional double zigzag like this. That would be my alternate. So things break down from here. That's going to be my preference. If, however, things go higher from here, the bullish primary remains in effect, and we will go into a wave 3, which will clear the previous highs. If for any reason we go 1-to-1 parity, it doesn't have to be, A can be extended, C can be extended, but 1-to-1 is the most common. Let's just see where we would go with this. It's a good idea actually, just to check this out. 1-to-1 would bring us in below the highs. Now if we did something like that, then maybe it's this diagonal pattern. A, B, C into B, and then 5 down in a 2. Right. But we'll have to see how we come out of here. If we do come out of here today, and we come out of here rip-roaring, nice clear 5 ways up, back, and we keep going into next week, then clear event and momentum supports it and we look strong, then it's likely a 3 rather than a C. However, that just needs to be on the that needs to be considered. Okay, so there you go, there's all the counts. Primary is still bullish. My preferred alternate of how we go lower if that bullish count breaks down. If we go higher, it could be the bullish count, or it could be this little hidden zigzag into a B, A, B, C idea. Okay, so staying bullish until we lose confidence, or if we lose confidence. Like I said, I'm filming this before market opens as I've got to get out for the day, so by tonight I might know. If this breaks down violently, I'll switch to the alternate. If this bounces strong higher, I'll stay bullish. There you go. I can't make it any simpler than that. Alright, so now that we've done our Elliott wave, let's just have a look at some basic technical analysis here. Bring up our indicators. Let's just get rid of that line. And let's look at some geometry as well. So if we go back to parallel channel for a moment, this is based off of the idea that this was the subwave. Now we were working on the premise back then that we'd gone 1, 2, 1, 2, so on and so forth, up to here 3, 4, 5, and it never happened. We broke down out of this channel. Now it doesn't matter whether I get a regression channel from the lows and I run it right up to present day, right? We've broken this regression channel. If I run it up to the highs, which I think is much fairer, and extend it, you can see how this was basically the trend the whole time we were moving up, right? And we solidly broke it. So in this regard, the sell-off we saw from high to low was 22%, which is technically enough to be a bear market by the media's arbitrary standards, which I don't believe is how we define a bear market, but whatever. Either way, it's sufficient. Now, is it sufficient to say 1-2? That's been the big question the whole time. It's too shallow in many respects. However, shallow wave 2s are perfectly normal. And if we look at this, I know we're as a percentage it's smaller than the COVID crash, but if we talk about this in points, it's 3,763 points that fell off of here, right? 3,673, and this was 2,952. So percentage terms it's smaller than the COVID crash, but in price terms this is a significant gouge in the Nasdaq, there's no doubt about it. Another zigzag lower, however, would be a really significant, gouge in the Nasdaq, and does look more compelling as a 1-2. I will admit that, but price action currently looks more bullish. So, if we look at the extremely strong bullish divergence we got at the lows here, series of higher lows on the RSI, lower lows, okay, lower lows in price. This supports the idea of this being a pretty sustainable low, okay, or more likely, strangely, the diagonal, and that we're getting weaker. Our bearish move lower was getting weaker the whole time, which is very typical of a wedge shape of a diagonal, that we start to build up divergence at the lows. Excuse me. Now we see the same here in the MACD. Strong bullish divergence, right? Now let's see what else we can see. The move off of the low in terms of momentum, I pointed this out before, and one of the reasons why I still feel quite bullish is the strongest move we've seen here in the MACD. We look at the histogram. This is a serious piece of bullish momentum that we've seen for ages. Stronger than the move off of the low in the March 2020 lows. Okay, this is the first major collapse or major thrust in bearish momentum since that sell-off. Everything else has been marginal in between. This is an incredibly strong bullish move back above the zero bound. So that kind of feels like it was enough. Now, I've got to support my bullish count in one way or another, and that seems pretty compelling. Now, we didn't get back up into overbought conditions though, which is something I would have expected to see off of the back of that bullish momentum. So that's a bit of a caveat. You know, we had this bullish divergence, but we couldn't quite push into overbought conditions. So that, from a pure RSI point of view, is a little weaker. So it's a little, could go one way or the other, as always. But at least we have a clear path, one way or the other, as to what to expect. Now let's have a look at our moving averages here on the daily. So we broke the 250 here, the green line, and continued lower. We then dragged the 10 and the 20 back above the 250, but have since rolled over. Now at this moment on yesterday's close, the 60 is crossing 250. This is traditionally a death cross. Now it's not done yet. Okay, so if we suddenly rocket out of here, we can reverse that. Now, as I pointed out in the past, the death cross is is commonly related to a low in the market occurring. Now, it doesn't happen necessarily on the day, but it can happen within a few days. So we could have the bearish crossover, like death cross. We could drop, and then that could be your low, with that death cross forming. So how low, how deep could this second zigzag be? Does it have to be huge? No, it could just be enough just to get price slightly lower, and then it could be there. If we rocket out of here, we could avoid that death cross completely. Okay, now let's have a look at it on the weekly. Coming up to test the 60 exponential moving average on the weekly. So this tends to coincide with the 250 on the daily. Okay, 60 trading days in a quarter, 250 trading days in a year. We come to the weekly chart on 60, and we can see how it's not a pure rejection candle. It's not really bearish, but we did have this long wick to the upside to the 60. Okay, now the week's not closed yet. It's only Thursday, right? But if we were to get this long wick and then a red candle down here, that would look like a rejection. That would look very weak. Now, we've also, on the MACD, brought the average back up to the signal, but then we've rolled over. We haven't got a buy signal here, and we haven't translated into any bullish momentum heading back towards the zero bound yet, so we still look pretty weak at the moment here on the weekly. Now all of this could change in the next 24 hours, right? We could get a big push up here, but if things don't strengthen, we're going to have a pretty bearish close to the week. Right, it's not going to look particularly strong. Alright then, so that's the Nasdaq. Now let's come over and have a look at the SPY. We'll do the same. We'll turn off all the count for the moment, including everything leading up to 2020. And once again, now this parallel channel, I've drawn this differently. I've drawn this taking in the lows here. So this is the old idea of this being 1 2 1 2 2 2 to a 4, right? Now we're not using this idea anymore, but it is, I guess it is still technically possible. I'm just not a big fan of it because the depth of this correction. So what we'll do is we'll ignore that for the moment, and we'll make the same point we were making with the Nasdaq, which is we've run a regression channel up here, we can see how we channeled neatly to the highs, and then we have since fallen way out of this thing. So even if we were to drag this forward in time to take in all current price data, we can see how we've still comfortably broken trend. Okay. Also in the MACD here, I pointed out that the move we've had off of the low, this move here, which is the initial move off of the low, and this move here are significantly stronger momentum wise than anything we've seen since the rally off of the March 2020 lows. So let's just move that line up to the top of where the average and the signal got. So as you can see here to here, so it could be a B wave or X wave rally, or it could be the real deal, right? It's the strongest shift in momentum we've had since coming off of the March 2020 lows. So another reason why I was leaning into the idea, and still am for the moment, that that was a sustainable low. Okay. Now the volume. We got a peak of the volume, or two peaks of the volume here at these two lows. So that could be enough to signal capitulation down here. Okay. Now we did this while the whole time bullish lows are forming in the RSI. We've got this big bullish divergence, same in the MACD. We continue to have a series of higher lows, okay, in our momentum indicators. Now you can say, oh yeah, but volume's dropped off. Yeah, that's all it ever does. Okay, every time we rally, volume declines. Okay, every time we rally, volume declines. It's just normal. Okay, the peaks are the sell-offs, right? So we're in the same kind of sequencing we've been in the whole time. So I don't see anything suspicious there. Oversold, oversold, not getting back to oversold with this pullback here. We did reach overbought conditions on the day. Sorry, this is the 4 hour. Let's come back to the daytime frame. We fell just short, excuse me, of oversold, overbought conditions on the daytime frame. Came up. Actually, we just made it. We just bumped our nose into that territory. We've come back into neutral territory now. What we want to see, like when we were being bullish here, is we stay in. We don't come back to oversold conditions, right? Once we're trending, okay, we have these larger wave degree corrections, like here and here, bump, bump, bump. These take us from overbought, oversold. That's what I call a round trip, right? And that is a pretty common way on the daytime frame of identifying a larger wave correction. So you're in your minor waves and your minute waves and minuet waves, and then you get a larger 1, 2, 3, 4, and we go overbought, oversold, overbought, oversold. Now it doesn't always happen like that, but it's a pretty standard, or what's the word? It's a reliable way of looking at things. You can say, well, you know, a significant wave degree should result in a significant sell-off. A significant wave degree should push the RSI down into oversold conditions, so on and so forth. Now, currently, we've had that round trip again, right? Overbought to oversold, and we've come back to oversold, but not deeply into it. We've come slightly to overbought. So what we want to see now is trending price action that doesn't bring us back down into oversold. We want to start climbing up into overbought and doing something like this. That's the idea, that we've gone into 1, 2, 1, 2 into a 3. We should have very strong, continuous bullish momentum trending in the RSI. And I'd expect to see the same in the MACD as well. So if we do break down through that 61.8 and we come down into oversold again, that's going to have me suspicious that the bullish count is not correct and it looks a little weaker. Okay, so I think that's all I've really got for you guys. Let's have a quick look at our moving averages here. So visual range, we're right around the biggest node of volume at the moment is right where we are. Now on the daytime frame here, very different story in the SPY. Let's just come back and remind ourselves how much more bearish the Nasdaq looks. It looks weaker, right? We were weaker off of the low with the RSI reading. Stronger with the MACD off this initial move. That's confusing me a bit, that is. But when we look at the moving averages, we're below the 250, the 60, the 10 and the 20. Now if we look at the SPY, we're above that 250 exponential moving average. Okay, operate the support here. And last time we saw it operate as support was... Right, there's resistance here. 60 was operating as support here. So this is the first real time we've tested it since coming back above it. Broke it, come back. Haven't broken it again yet. We're still above it. The 60 is a long way off crossing through the 250 here on the daytime frame. So the SPY does look generally more bullish than the Nasdaq. So conflicting messages, but at least we've got something to work with here now. So if this continues to break down further, start to lose confidence in that bullish count. We've got our invalidation points, right? But for the meantime, we're above that 250, we're above our point of control here. Everything looks like it has before. Volume starting to decline as we start the rally. Everything looks kind of normal. So for the meantime, I'm going to remain bullish, but I'm going to caveat by saying we're on the line. We're not far from me changing my mind, but I'm going to stay primary bullish for the meantime. Same here on the Nasdaq, but it wouldn't take too much to shift me. Alright then, so I intended this to be a very short video, but I've gone off on one a bit, waffling. I'm still getting into the flow of things after being off for a couple of weeks during paternity leave, and little one's doing a lot better now, putting on weight, healthy, everything's looking good. And hopefully from next week I should be much more into the flow of things. So, right then guys, if you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. I just want to say how much I appreciate you guys sticking with me and appreciate your patience during this time while I have been preoccupied with life stuff. And we are getting back into the rhythm now, so I'm going to have a bunch of videos coming for you guys soon. So all the best, take care, and if you're interested in joining the Patreon, head over by following the link in the description box below. Have a read of the different tiers, see if there's anything you're interested in, and feel free to sign up. Take care guys, and I'll be back with you soon. All the best, bye bye.